How's it going, everybody? It's the Crypto Oracle here, and today's video is going to be a little different. I'm going to be explaining why small-time crypto traders like you and me, everybody that's either learning about crypto, just getting into crypto, or somebody like myself who's been in crypto for years and years and years, actually has more power in terms of trading than the big banks and the hedge funds and everything, and why we can personally make a little more money and kind of have the options to make more money than something like a hedge fund that's trying to get into crypto. So I'm going to go ahead and get into it. There's two main points I'd like to make. I'm going to make the biggest point first, which is volatility. Now, explaining volatility, I'll go into it this way. You really have to explain how a hedge fund works for its investors. So a hedge fund on a quarterly basis is going to want to continually be pushing profit, okay? Somebody who's going to invest in a hedge fund is going to be like, a 50, 60-year-old guy who's made some money, usually over the $1 million mark, and is willing to invest that $1 million plus into the hedge fund. It's not going to be small-time guys who are trying to invest $30,000. Those guys are normally just going to go into mutual funds. But a hedge fund is somebody who wants to put their money in the power of these really smart analysts, these really smart bankers, the guys that can make these big power positions, unlike something like a mutual fund. But a hedge fund is still going to want to make money every single quarter. The worst thing a hedge fund can do is have a down quarter. The best thing a hedge fund can do is have a continued streak of up quarters. So if they're up, 5% each quarter, that's going to be way better than a hedge fund that's up 20% one quarter and down 5% the next quarter. Okay, because that's not what people want. People want continued growth. They want surplus growth more than something like a mutual fund is going to get them, 6% a year. They want the reason why they're putting so much money into a hedge fund and why hedge funds have those capital requirements is that they're making more money and they're making it every single quarter. So that's how a hedge fund works in terms of the consumer side. So why can't a hedge fund invest in crypto? We're looking at the chart right here. This is over the past few months just for Bitcoin to US dollar, and you can see the volatility is pretty crazy. From a quarterly basis, it looks great, but it also just shot up over the past few months. So, we saw a huge, we saw, like, as you can see here, 4 or 5 Elliott wave repetitions. But if you look into a coin like Neo to Bitcoin, something that we as small-time crypto traders are a little more excited about, if we look into this, a hedge fund is not going to be excited by this. They're going to say, oh, wow, it went from, $10, well, it started at $5 and it went to like 15, dropped back to 10, then it went up to $60. Wow, that's like 6 times profit. And then it dropped back down to the minimum of $16, and now it's hovering right around 25. Now that's great for us because we can hold this, and I'm personally holding this for years and years and years. So I'm not scared by it dipping down to $16. That's just the market. That's just the volatility. That's just low volume markets. That's going to happen. Okay, but a hedge fund who the first quarter, as you can see, makes 100% profit, and the second quarter maybe goes in like here and makes a bad, it's not even making a bad trade. It's just the volatility of the market. It's just regulation in China, money going into Bitcoin, money going into other coins. Neo dropped, and then how are they going to explain to their investors how they're down, what is that, 50, 60%? They can't explain that to investors, okay? They don't want to explain that to investors because the investors are just going to say, okay, get the fuck out of crypto. Okay, go invest in oil, go invest in commodities, go invest in this stock, go invest in certain bonds, high-yield bonds, high-yield stocks. Go invest in something that you're used to investing in where you can make money. Because crypto, yeah, you can make money. You can make 6 times profit. But a hedge fund is more concerned about making profit every single quarter, not making 6 times profit this quarter and making a 60% loss the next quarter. Okay, that's not what they're interested in. And that's why we just have more power because we're independent traders. We're not controlled by our board. We're not controlled by our executives, and we're definitely not controlled by our capital investors. We're controlled by our own investment and the emotions behind that. But as long as you have enough, if you're stoic enough about it and you say, I believe that crypto is going to be a $1 trillion market in 2 years, in 5 years, then you're not going to care about the volatility right now. Like, yeah, you can time it, and everybody tries to do that. You can time it. You can say, hey, Neo's about to drop. I'm selling now. I'm going to buy back when it's lower. That's great. Okay, that's what obviously you should try to do. Or you can just hold forever. You can just hold for the next 5 years, and you can still, your money can go up 10, 20 times. And that's just the difference, because a hedge fund can't do that. They can't tell their investors for like 10 quarters straight after they're down on their Bitcoin investment or their crypto investments, 10 quarters straight. They can't say, oh, just give us a few more quarters and then it's going to go up. You can't tell that to an investor, especially not a 60-year-old guy who's trying to retire in a couple years. Okay, they just want continued profits and they want some sustainability. Okay, they don't want volatility. And that's just what we like in crypto. That's what we like in crypto as small-time traders. And when I say small-time traders, I mean, you know, anybody who's trading personally with their cash. Non-institutional traders is what I mean. Like, I mean, you could be trading with millions. You're still a small-time trader because you're not trading with other capital. I mean, you could be like a family office, but that's a different story. You'd have to have a lot of money for that. And then my second point is volume. Okay, when a hedge fund takes a position in a company, they're usually taking positions if they're trading for the overall fund. If it's not just like one analyst who's like, all right, I'm gonna take a position for 1% or whatever. If it's an actual large position and it's being approved by, you know, the board, or not the board, but, you know, the execs, basically the investment execs, the volume that they're going to be trading with is going to absolutely destroy the volume in crypto. And by destroy, I mean they're making $200 million, $500 million investments. You can't make a $500 million investment in most coins, unless you do it over time, unless you're an early investor and it grows to 500 million. You can't say, what's a normal cap coin? You can't say, okay, you can't go into freaking Monaco and invest $500 million, okay, because the total market cap is currently 87 million. All right, you can't invest $500 million. You can invest $5 million, 10, and $10 million is still going to influence the market a lot. But you invest $10 million into this, yeah, you could grow it into $20 million. Okay, I mean, that'd be a great trade for all of us. If we put 10 million and doubled it into 20 million, that'd be the trade of the century. If an institutional guy says, hey, I'm going to be investing in this for $10 million to flip it into $20 million, they're going to say, why? When you can invest in a commodity for $500 million, turn it into $560 million, and you're making 6 times the profit that you would investing in a small-time crypto coin. Right? This isn't even a small-time. Monaco's media. Okay, it's still top 100. Okay, yeah, so that's my second point. It's volume. It's just, I've tried to explain this in so many different ways, and those are just the two biggest points, is volatility and volume. Volatility meaning hedge funds. To recap, hedge funds, they just want constant growth. They want constant positive quarters. And volume, hedge funds, big banks, they're just trading with too much money for the crypto market as it is right now. The crypto market, 145 billion market cap, that's tiny. That's tiny, I'll tell you that right now. That's smaller than most decently sized companies, okay? But that's also why it's exciting for us, okay? And that's exciting for us because the big banks, they can't get in yet if they want to make profits, and if they want to, you know, if they don't want their investors to get mad at them. Now, there are banks that have funds. I've talked to banks that have Ethereum funds, okay, but Ethereum is a $27 billion market. Even then, I think the ones I talked to, they have like $40 million funds in it. It's not like they're investing billions and billions of dollars yet, okay, because there just isn't the volume for it yet. So yeah, that's what I have to say. That is why we have more power than them. So thank you guys for watching. So make sure to subscribe down below. Make sure to like the video if you enjoyed it. Go to @OracleOfCrypto on Twitter, which you can see right here. If you'd like to follow all of my announcements, pretty much anything crypto related is what I'll be tweeting out, especially live streams and videos, updates like that. If you would like to join the free public trading Slack, 500 plus members at the moment, so really growing a great community. Just send me a DM on Twitter with your email address and I'll make sure to invite you to that. I usually get back within a day or two on Twitter. If you'd like to join the private trading Slack, where I share daily chart analysis, you're in a community of 300 experienced and advanced, and also there's some beginners in there that are still trying to learn, so great for beginners as well. Crypto traders, 24/7 conversation going down in like 20 different time zones, so there's always conversation going down about crypto, and you're getting the latest news because the guys in there, they're always sharing news right as it comes out, probably even faster than like the people on Twitter. So if you want some guys that got your back, some guys to trade with, definitely check out the Patreon link below to join the private trading Slack. So again, thank you guys for watching. This has been the Crypto Oracle.